Earnings season is finally here, and it can never get more exciting to start out with two exciting but troubled REIT, and that is Keppel Pacific REIT and Keppel Pacific Old REIT. Recently, these two REITs have a lot of issues, with Keppel Pacific Old REIT suspending their dividends and Keppel DC Reit having their tenant payment issues. These two REITs has been badly hit. So in this video, let us go through their recent earnings and what we can get out of it. For those who are new to Keppel DC Reit, they are a REIT that focus fully on data centers with 3.7 asset under management properties. However, in recent times, they are having some issues with their main China master tenant, and that is Neo Telemedia. Of course, the situation is still unclear on what's the path forward, and situation might have gotten worse with the master lessee suspending trading due to a delay in the financial release of their results. If you take a quick look at their tenants' earnings, it's actually quite a big concern on how they are being operated. So in December of 2023, Keppel DC Reit management have issued a letter of demand default on rent and coupon payments related to the three China data centers. However, the management seems to be taking a softer approach by working with the tenant on a recovery map. Although the management has retained its rights to terminate the master leases, it's still a concern because terminating the lease would mean that for these China assets, there will be this period of time when they do not contribute to Keppel DC's income. Therefore, this is the main issue that Keppel DC Reit has been facing in recent times. So let's get on with their earnings. So let's look at the key highlights performances. Distributable income came in at 38.8 billion. And if you analyze it to compare with the previous year, it's a drop of negative 8%. This huge drop is due to the loss in income from the China data centers and also due to higher financial costs. DPU came in at a surprising 19.1% quarter-over-quarter increase. But later in the video, we'll see what is the reason why. Portfolio occupancy is at 98.3%, while the average leases length is at 7.4 years. This is expected from data center REITs. Their average leverage ratio also increased slightly to 37.6%, while the interest coverage ratio has continued to drop to 4.6 times from last year of 6.0 times, partially due to cost of debt increases. They have also made some changes to their portfolio by selling one of their Australia data centers to the tenant. This asset is about 3% of the total assets, and the good thing is that they have sold it at a huge premium of 35.4%. When it comes to a REIT's divestment, it's important to take a look at what do they do with the capital raised. So for this situation, Keppel DC Reit has invested most of its divestment gains back into an Australia DC note given by the tenant. So what this means is that Keppel DC Reit has actually loaned back the tenant about 90 million Australian dollar. The expected return from this is that they'll get 6.3 million per annum with an initial yield of 6.97%. This is said to be a DPU accretive action with the dividend expected to increase by 0.7%. And it will also improve Keppel DC Reit's leverage ratio from 37.6% to 36.7%. Of course, with this action, it's important to take a look at what this company is. It's important that this technology group company does well so that they will be able to sustain this note payment. On the bright side, this Australian tenant seems to be doing much better as compared to the China tenant. So this might not be an issue for us. Now, let us take a look at their balance sheet. Now, it's very important to see how they do the accounting for their balance sheet. So if you can see, their gross revenue has increased quarter over quarter by a huge value of 19%, with the net property income increasing by 34%. So for those who are new to the property terms, essentially the net property income is derived by taking the gross revenue minus the property expenses. Revenue is of course the cash received from the tenants, while property expenses are ad hoc stuff such as property taxes, utility costs, and such. So the main contribution for this huge increase is due to the settlement sum received in relation to the dispute with another tenant. That dispute amount came in at 11.2 million, which was included in the gross revenue sum. This additional sum of money will be distributed equally across 4 quarters. This will help to lower the negative impact from the China data centers. For the Guangdong data centers, they are still recognizing the rental income as gross revenue even though they are not receiving it. However, this was being offset with a net loss or loss allowance in the property expenses. As you can see, for the year over year, it has increased by a huge value of 89.6%. One of the good things is that the finance cost seems to be stabilizing, with the finance cost increasing by 0.2% quarter over quarter. This finance cost is essentially the amount of money that they are paying for their loans. After going through all their expenses, the main factor that you have to look at is their distributable income, because this value will determine how much they distribute to you as dividends. Value wise, if you can see, for quarter over quarter it increased by 19.3%. This was mostly due to the bump up by the settlement sum from the Singapore tenant. If you see their year over year, it has dropped by 16.3%. This has caused their DPU to drop by 13.7% year over year. However, if we do some calculation and exclude the settlement sum, the distributable income will have came in at 35.9 million, and that will come in at about 2.034 cents. This would equate to about a 20% drop in DPU. The positive note is that if you compare quarter over quarter, the dividend has actually increased by 10%. As we look at their debts, leverage ratio is expected to drop in the next quarter. The good thing is that the cost of debts seems to have stabilized, with a drop of 0.1% to 3.5%. This is very important because this determines what is the average interest rate that they are paying for all their loans. Another positive note is that for the next 2 years, they do not have much loans to refinance. So as interest rate stabilizes, REITs might be finally seeing a peak in their cost of debts. Thus, this meant that as the finance cost finally stabilizes, REITs income hopefully will increase over time and therefore benefiting shareholders with higher dividends. Even though Keppel DC Reit's recent share prices have dropped quite significantly, it's still not at a very attractive yield, because at the current price and with the expected drop in the dividend yield, they might only be coming in at about 5.28%. With the recent China DC Reits issue, I do not expect the dividend to recover quickly as long as they do not solve this problem. Keppel DC Reit has always been one of the most reliable and safest REIT, so hopefully they will resolve this issue and they will start going back to their good old days. If you like my video so far, please support the channel by hitting the like, subscribe and comment on what you feel about Keppel DC Reit's results as well. Thank you, and let's continue with the video. Next, let us take a look at Keppel Pacific Oak results. Keppel Pacific Oak is one of the purely US commercial real estate REIT. US commercial real estate REIT recent environment has not been good, and this has discouraged banks from lending them money. To make things worse, with the bad environment, their property valuation has continued to dip, which causes their leverage ratio to go up. This has forced them to suspend their dividends, causing their share price to crash. So looking at their balance sheet, gross revenue and net property income came in decent with a stable value year over year. However, the distributable income has actually dropped by 8.8% year over year due to a higher financing cost. This is a concern because I expected the distributable income to stabilize, considering that the finance cost has almost reached a peak. However, rather than stabilizing at 13.1 million from the last quarter, they have actually dropped to 11.9 million. This is a concern because in their earnings call, they are expecting the distributable income in financial year of 2024 to come in at 60 million. But if you analyze this quarter's results, it will come in at only 44 million. With the recent difficulties in getting loans, it's important to make sure that the REIT itself have sufficient cash to pay down all these loans. If you see their debt profile, they have 12.4% and 25.5% that has to be paid off in 2024 and 2025. That equates to about 75 million and 154.8 million. Based on the full year financial report, they have a cash of about 43 million, and with the expected distributable income at 46 million annualized, they will be expected to have 89 million to pay off sufficiently for financial year of 2024. My main concern will be when it comes to financial year of 2025, where they have this huge amount of loans that either has to be refinanced or they will be forced to repay back. So similar to other US REITs, this is one of the main risks that you have to take note of. Any drop in the performance of their properties or the drop in the valuations will either push their aggregate leverage ratio to be more than 50% of the required limit, or push down the distributable income such that they will not be able to pay down their loans. In my opinion, out of the 3 US REIT, Keppel Pacific Oak REIT seems to have the better performance of the 3. So hopefully they will be able to survive through this period of difficulty. In conclusion, what can we get out of the results of these REITs? Lesson learned is that not only do you have to invest in the correct and good REITs, you are also required to diversify in order to mitigate this kind of unexpected events. Having concentrated in either of these REITs would have resulted in a huge loss. Therefore, it's important to diversify your investment so that it will mitigate all these individual company risks. Thank you so much for watching. I hope this brings about some insights into your investment journey. Please also support the channel by hitting the like, subscribe, and comment what you feel about Keppel DC Reit or Keppel Pacific Oak REIT. You can also take a look at my previous video where I talk about why I'm so optimistic with regards to bank's earnings. Thank you, and I'll see you in the next video.